Bitcoin has recovered as much as 27% since its recent lows in just the past couple of days, and the sentiment within the crypto market seems to be turning on a dime. What's going on, guys? It's Crypto Dave here at Top Tier Signals, and in this video, I want to talk about a very common mistake that a lot of you are making out there, as well as what we can expect in the coming weeks to months of price action for Bitcoin, and whether or not we are in fact flipping bullish, or if this is simply just a relief rally. So let's go ahead and jump right on into it. And before we kick off the conversation, if you like these type of market updates, we post them every single week. So make sure you're subscribed to our channel and tick the little bell so you get notifications every time that we post. But with that said, let's go ahead and kick off the rambling. Now, the common mistake that I'm talking about that is trapping you and ruining your profit potential within the crypto market is simply giving in to your emotional bias and allowing your emotions to change with every swing of price in the market. You could have bought Bitcoin at $60,000 several months ago, and you would still be at a break even today. So why is there so much emotion in the space? How come people are freaking out every time Bitcoin rises, every time Bitcoin falls? Well, the first thing has to do with the influencers within the crypto space that are preying on the emotions of retail traders. They are fueling your greed and they are fueling your fear at the wrong moments in time. Just think back to when Bitcoin was setting in its all-time highs. How many major accounts were coming out telling you that you weren't bullish enough, telling you that you were limiting Bitcoin's potential with your price predictions, and that you needed to be more bullish than you were and more bullish than ever before. And lo and behold, Bitcoin has not set in a new all-time high for several months. Even this past week, when Bitcoin crashed on the news that the Bank of Japan would be raising interest rates, people were preying off of this fear. They were convincing you that the bull market was over, that Bitcoin was going back down to 30K, 20K. They were using your emotions against you. Take a look here at the Bitcoin Fear and Greed Index over the past few months, and you'll notice a pretty consistent pattern. Now, the Fear and Greed Index is comprised mainly of 5 different things. We have the volatility of cryptocurrencies within the space, Bitcoin dominance, we have the social media posts, Google Trends data, as well as the momentum and volume over the last 30 days. So there's a couple of technical factors that go into this, but there's also a lot of social factors that go into giving this score that represents the overall fear or the greed within the space. And we can see here that at our highest valuations, we had scores that were above 75, which is generally in line with periods of extreme greed. We saw this here back in March of 2024, once more in April of 2024, and then once again in May and June of 2024, we got scores that were right on the cusp of that extreme greed. And if we even look at some of the lows, our low from July of 2024, we had scores 29, 26, 29, 28. We had that extreme fear coming into the market. And even just a couple of days ago, we set in a score of 17, which is well within extreme fear. We are getting too fearful at the lows. We are getting too greedy at the highs. We can also visualize this by looking at some of the funding rates here on the major exchanges. And if you don't know what funding rates are, just to put it simply, it is paying one side of the trade for holding the other side of the trade. So if there are a lot of longs on a specific platform, those longs are actually paying a small fee to those who are short, those who are selling. So essentially, if you have a big cluster of one type of order, you are going to have to pay to place that type of order. And when the funding rates get out of control, we can generally see that there's a lot of concentrated orders at a certain level that usually gets busted, and we get that liquidity grab, and the markets move in a crazy upward or downward trajectory. We can see it here at our all-time highs. We had funding rates of 0.25% as Bitcoin was setting in all-time highs. People were as euphoric and optimistic as they had been since 2021. There were too many people with too much leverage going long at these high valuations. Conversely, we can also see that as price was going down to its range lows, we saw some negative funding rates, meaning that there were a lot of shorts piling in at these low ranges, people using leverage to try to short the market further, once again, collecting that liquidity and squeezing those shorts and pushing the price higher. So if there's any one thing that I want you guys to remember before we jump into the charts is pay attention to the sentiment, the conversation that is happening in the space, especially when we're getting these major swing highs, major swing lows. Pay attention to the funding rate. Is one side of the trade having to pay excessively to another side of the trade? This can help you avoid these moments where liquidity is being grabbed from the market, people are getting stopped out of their trades, and ultimately you just don't want to be involved in all that commotion. All right, so let's go ahead and dive back into the charts. Bitcoin has recovered as much as 27% off of its lows. There's a lot of optimism returning to the space. People are calling for that $50,000 bottom. And I just want to share an honest perspective, dig into a couple of different time frames, and show you guys the key things that you need to be paying attention to as to whether Bitcoin is going to show that strength or if we are due for a further extensive correction and potentially even more downside. So let's go ahead and let's start in the monthly time frame for Bitcoin. We've shown this quite a couple of times. but it's going to be the $60,000, roughly speaking, level that we've seen play as a major level of resistance in the past that is currently acting as a level of support now. We can see that in the 5 months preceding August, we have gotten dips down into this range or slightly below, and each time price has recovered, buyers have come in, and we have closed the month above this $60,000 level. And if we take a look at our current candle in the month of August, this is also what we have. We have a major drop below the range. Buyers came in, they've pushed price back up, and if the candle were to close today, then we would still be holding that $60,000 support level on the monthly time frame. But there's also 3 more weeks in the month of August, so this could play out any potential way. I just want you guys to keep this $60,000 level in mind. It's very key for the monthly time frame that we continue to hold above $60,000. And beyond that, I'm really not going to get super bullish until we see a monthly close that takes out our previous high monthly close right around $70,000, $71,000. If we can get a monthly close that sustains above that $70,000 mark, I will be extremely bullish for a second wave of this bull market. But until that happens, I'm watching 60K and I'm hoping and praying that we don't close below it, because if that's the case, then we might be due for some further downside. Moving in lower, I also want to point your attention to the 21 and 50 daily EMA cloud, which we've talked about a couple of times on the channel, and it remains a very important indicator as to the direction and the strength of the overall trend. And we can take a look back in time. We can take a look back at our 2020 to 2021 bull market. We had the 21 trading well above the 50 the entire time, and every time price dipped back into this cloud, it acted as support before continuing to move higher. Fast forward once again to our 2022 bear market. We saw price move below the cloud, we saw the 21 cross below the 50, and for the rest of 2022, going into the end of the year, this cloud served as resistance on each backtest despite a couple of deviations that were only temporary and short-lived. And if we consider our recent price action, we see that the same thing holds true. Towards the end of 2023, we got that bullish cross that we needed. We saw the cloud acting as support on the way up. We had a couple pullbacks, a minor deviation, but ultimately the cloud was acting as support, and we saw that shorter term moving average trading above the longer term moving average. So just take a look at what we've had in the last week. We saw another bearish cross, 21 moving below that 50, and when we rebounded off of our lows here, we saw a point of resistance exactly within these two moving averages before price ultimately stopped in its tracks, and we have since gotten this cool down, which could roll over further back down to range lows. Maybe we just consolidate and break back above the moving average cloud. We don't quite know yet, but what we do know is that on the daily time frame, we need to see the 21 back above the 50, and we need to see the cloud acting as support multiple different times. Now, even if we do fade that EMA cloud, I'm not convinced that we're entering into a new bear market. I do think that we are staring some nice discount opportunities in the face, especially in the altcoin space if you know where to look. So I want to talk to you guys about 2 specific levels that I'm watching that could act as a key level of support for Bitcoin, as well as a great buying opportunity for you as a crypto investor. The first level we need to look out for is this $50,000 to $52,000 range. We saw a nice little order block here on the way up, and this is where we grab liquidity on the way down. So we can see that this is clearly a spot where there are a lot of orders, potentially a lot of volume, and this could be a key level of support should Bitcoin continue to bleed out further. But there's an additional level of support that I think could prove to be a little bit more important, and we'll view it on the weekly time frame. Now, the next level I want you guys to focus on is between $44,000 and $47,000 for Bitcoin, and we created a huge imbalance here over the past few months with the successful launch of the Bitcoin ETF, paired with the Bitcoin halving narratives and all the optimism that was in the space. But if we look back in time, we can actually see that this has a lot of confluence that dates as far back as our last market cycle. We can see that several times in the late stages of 2021, we saw this level acting as support. When we broke below it, we saw it acting as resistance upon the retest. And when we had the launch of the Bitcoin ETF, we did get a brief pullback. It was acting temporarily as resistance, but we shot through the level without any sort of retest. And this is what creates the imbalance. So what we would like to see is if price can come back down to this level, can we establish a strong amount of demand at what was previously a level of resistance and set in that bottom before eventually moving higher? Now, the last thing I'll discuss is some price action that we saw in 2021 that is pretty similar to what we have now. We had a major capitulatory candle here with a liquidity grab at $29,000 before a 44% bottom to top recovery. There were a lot of optimists in the space that said, hey, look at this strong recovery. This was just a quick bottom. We were just flushing out some leverage. We're ready to continue higher. But as a matter of fact, it was 2 months of sideways, choppy, bleed out price action before we actually established that low and continued the uptrend. Now, comparing that to today, there are some similarities. We have a capitulatory candle, we have a very strong recovery off of the lows. We're also doing so in some slightly bearish market structure. So it's very possible here that we range around, chop, bleed, whatever it may be, before finally resuming that uptrend. And this could take weeks, this could take a couple of months. And it doesn't have to play out this way. Believe me, I would love it if Bitcoin went to all-time highs tomorrow, but we need to see those key signs of strength that we don't have just yet to be able to confirm that we are headed into a sustained, healthy uptrend where Bitcoin can re-enter price discovery and set those new all-time highs. We get that altcoin cycle and everything that we've been waiting on for quite some time, but we need to see those signs of strength. And until that happens, I would expect that we are in a chop or bleed scenario, moving back down to that $50,000 order block, potentially moving as low as $44,000 to $47,000. So there's a lot to watch. There's so many different narratives to pay attention to. We're going to cover all of this on the channel and more. We do market updates every single week, so subscribe to the channel, tick the little bell so you get notified every time that we post. And beyond that, if you want to learn how to be a better trader, you can join our premium Discord today, get access to over 20 analysts between stocks, forex, crypto, and learn from people like myself, as well as others within the community that are here for your education. So check it out. Links are in the description. And until the next video, I'll catch you guys in the Discord. Peace.